Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, Paul, welcome back. How's it going?
Good, man. How you doing?
I'm good. Kind of a rushed afternoon trying to get kids fed and off to football practice and get a podcast recorded and all of that all in the same little block of time. So, but it's good. Yeah.
Roger that. Yeah, I'm in the same boat. No sports today, luckily, though. And I'm not coaching anymore, so it frees up a little bit more of my time. It became too much last season for me, and I didn't, now I can take a breath when I get home. I'm not just like rushing out the door to go to practice 3 days a week.
That's nice. I coach in the summer, like baseball, I help coach, football, I help coach. But once the winter hits, man, since my oldest doesn't play basketball anymore, I don't coach that anymore. But I just got two younger ones in hockey, and I don't know anything about hockey. I don't know how to skate. I'm wearing a Bauer t-shirt right now.
Yeah, they make skates and
so
stuff.
people think I know something about hockey, but I don't.
You know that it's expensive.
That's the only thing I know about hockey is, man, it is draining. Yeah.
I remember my mom telling me, because I only played baseball and basketball. I played soccer as a little kid, and then, my parents were like, oh, that's a communist sport.
That's what my football coach always called it, a commie sport.
Yeah, but after that, she's like, hockey's that's for rich kids.
Yeah, you're not a rich kid. Yeah, no, it's for every kid in Minnesota apparently. So
yeah, some of the best hockey players in history have come out of that state.
Yep,
it's like Canada. I mean, more or less.
Always from Canada, but most in the U.S. Yeah, heavy amount of them definitely from Minnesota. So, well, all right, man, let's get started. Let's start with a question from actually a current client, Tyler. He sent us an email. So he's already got his policy in place, and I think he's already looking for ways to start another policy. Like, how else could I more efficiently use my capital and be more productive with it? So this is the fun part, right? You get a client that gets a policy in place and they start going, and then we get to coach them along the way because the wheels start turning and new ideas start coming to mind. So Tyler says, and I will paraphrase, but he said, is there a way to capture all subscription or charity giving capital prior to giving that money out or giving that money away? How is that? And then how is that different for monthly versus annual subscriptions or giving? So when he says subscriptions, I'm assuming he means, maybe streaming services or, internet bill, common bills that you pay every single month. And then giving is something I think I've talked about before. We both mentioned this before. You could capture that giving into a policy before you use it. So, what are your quick responses to Tyler about this topic?
Yeah, I'm going to give the worthless answer of it depends.
Yeah.
It depends on what it is. It depends on the frequency of payment. I think for annual stuff, right? Yes. I think that's easier to do. And I know there's some folks out there that are saying you can route everything through it, but that's, if you read Nelson, that's really not the intent, right? It's for major purchases, cars, education, mortgages, and investments, right?
Financing those things that you would typically go to a bank to finance throughout life. Yeah.
Exactly right. But I do feel like for charitable giving, if it's, let's say it's I have several clients that tithe 10% to their church every year. And I would ask them in the process, I was like, hey, does your church allow you to tithe on an annual rather than a monthly basis? They say, yes, as long as we, declare that we are a 10%, tither, then we can do that. We're still in good standing. I said, okay, fine. So I like capturing it if they're, if in that sense where they just pay that tithe once per year, and that before that tithe goes out the door, it hits their policy first. And there's ways that we can, with certain companies, where we can design policies either with lump sums or some other, we just build more, paid up addition space in the policy to capture that tithe. That's how you would do that.
Yeah,
But for subscription stuff, not monthly, I don't like that really.
Yeah, I think that makes it too complicated. Like you're trying too hard, and I think eventually it's going to be a very, very rare person who would actually do that consistently every single month and be okay with it. I personally wouldn't. It's too complicated. It's too many moving parts. I
Yeah.
don't
The
like
other
it.
thing is, your life insurance company is not, this is the infinite banking concept, but the life insurance company is not a bank. It doesn't have like 5 million gophers that are just waiting to take your phone call so you can transfer money or does that make sense? Yes, you have online access, but it's just the mechanics of it doesn't. I just
Yeah,
my answer is no on that kind of stuff, but yes on the bigger stuff, on the annual stuff.
yeah, I agree. Annual or even semi-annual,
Yes,
giving, tuition, tithe,
yes,
things like that. I absolutely, and I've already created one for myself. And we're not going to talk about how to create one to be beneficial or to actually make it useful for you. But I'm always happy to have that one-on-one conversation with people how I created mine to capture my giving and still be able to pay the premium and repay every loan every single year.
right.
So
And Tyler, we've mentioned this before, but I'll mention it again because I route. I do pay quarterly taxes, and sometimes I end up with a larger tax bill at the end of the year, even after I file. So I get space in a policy for that money before it leaves
sure,
my personal economy forever. And over the long haul, it'll make me that much more wealthy because I'm never losing use of that money. Right.
absolutely, it's perfect for quarterly taxes, capturing that
Yes.
money, and then also
Quarterly
out of sight,
taxes,
out of mind.
annual.
You don't
Yep.
have it in your operating account, so you're not tempted to use it for something for a business expense. That's put away, that's socked away for taxes.
That's right.
Yeah.
That's right.
Cool.
So great question though. That is an excellent question.
Very good. All right, man. Well, today we're going to talk about the hot topic of student loans and what they are calling now student loan forgiveness. So recently, within the last week, maybe last couple weeks of this podcast being published, the president has declared I think it's $10,000 quote unquote forgiveness on anybody who's holding student loans. I don't know all the details around that, if it applies to everybody or if there's an income limit or anything like that. I didn't really look into that. Do you know any more details on that?
No, I haven't dug into because it kind of triggered me anyway. But no, I haven't dug into the details of it. But generally there are strings attached with any government thing, whether it's qualified plans,
Yeah.
tax breaks, tax credits, whatever, right?
Yeah.
So I don't know the answer to that question. I tell you who doesn't get to benefit is the people who already paid off their loans.
Yeah. Or the people who never had a college loan.
Right.
Maybe, people who went to a trade school and they have a blue collar job as a plumber, electrician, whatever it is. Is there any forgiveness on their trade school loans? I don't know.
I'm
I
not
haven't
sure
seen
either.
that. So,
Right.
so that's something that triggers me is like, there's all this talk about, hey, it's kind of the same as with mental illness where everybody's like, oh, you shouldn't, shame people for not having a college degree or for having mental illness and having to take anxiety meds or something like that. But then at the same time, the other side of their mouth, they're like, oh, well, you don't have a college degree, you don't get any forgiveness. We're not going to help you out in any way. Oh, and then they blast people for, taking a mental vacation, mental health break or something from sports or whatever. It's the dual-sided nature of the media that says they support one thing, but then their actions actually support another thing. So I think you're right, man. There are people who are going to suffer from this, and it's certainly not fair to them. And like, who else is going to suffer? Like every single taxpayer in America.
Oh yeah, no question. And I think that's where, this is an emotional topic and we're not here to disparage anyone that's taking advantage of it. You'd be silly not to take advantage of this opportunity, right?
Right.
So we're not here to disparage anybody at all. That's not the intent of this podcast. We're trying to just give some simple facts and things to consider really of the long-term effect down the road of policies like this. Anytime you hear the word government stimulus, because let's face it, this is what this is. This is government stimulus,
Yeah.
which means it's taxpayer funded stimulus.
Right.
You're either going to pay for it through increased through the tax code. You're going to pay for it through inflation, and it's no different with this recent decision.
Yep.
You can't just eliminate debt willy nilly. It just doesn't disappear. That's not a thing.
No, it gets transferred.
Right.
So
it's really a wealth transfer, quite honestly.
It's a wealth transfer. It's a redistribution. But yeah, like you said, these are
wealth transfer to the rich, really.
Exactly,
because go to college.
Right. So who is this really benefiting? Oh, it's benefiting people who make a higher than average salary.
That's right.
Because they're the ones that have the college degrees.
That's right.
So I mean, so much for really caring about the poor. We're going to put this tax burden on you, everybody else who doesn't have a college degree, so that we can benefit those who do make more money than you. But it's not. So the word forgiveness. So here's what we're also not for. We're not for this quote unquote forgiveness, but we're also not for the predatory lending and the misleading terms on these federally guaranteed college loans. Like you're taking a 17-year-old moron. Like, let's be honest, who's not a moron when they're 17? They go to college and like, how do you actually know what you want to do for the rest of your life when you're 17? Almost nobody does. Like you and I knew we wanted to join the military and fly and be attacked.
But I was still a moron.
Yeah. It doesn't mean I knew how to read a balance sheet or knew how to read a contract that shows how much money I'm actually going to have to pay out of pocket if I borrow all this money from a bank. And then, oh, guess what? Later on, I was just talking to a client and he said he knew the terms of his loan, and then he combined what's that called? He took different college loans and lumped them all into one, right? Consolidated,
right. Like a debt consolidation.
Yeah. And it canceled out everything else. Like the original terms of the loan were canceled out completely.
Correct.
And now he's hosed because it's completely new. He's getting charged interest out the wazoo, and it was really a terrible idea. But he was being misled to believe that this is in his best interest, and it's not.
Right.
So we do have empathy for that, for the people who are taken advantage of, and which is pretty much probably most people when it comes.
Yeah,
to
no
those
question.
loans.
And what I don't like is that, and we're going to jump all over the place, people, as thoughts come into our heads. This is completely unscripted, believe it or not. Is that what no one's, it's being talked about in some media circles, but what is the root cause of the fact that tuition has gone up, umpteen 1,000% since 19 whatever.
Well, I can tell you actually, now that you mentioned that, it's gone up. Did a little research here on it was 169% in the last 40 years.
Right. That's insane.
Yeah.
Right. But wages have not. Real wages have actually probably gone down since 1980 with all the money printing. Don't quote me on that, everyone, but that's...
Well, I saw another stat saying like the average college graduate starts off at a job making $59,000 a year today.
Okay.
Where adjusted for inflation, about 40 years ago, that average starting salary was $69,000.
Right.
So there you go.
So I was right. Yeah. So, I'd like to see the serious people, the adults in the room. I would like to see them address the root cause, and behind every economic situation, generally speaking, that's unfavorable to the middle class is a also equally silly government policy.
Right.
I don't care if it's affordable housing, rent control. I read a lot of Thomas Sowell, obviously, and he's not wrong, but there's no consequence for these bad policies. So what I'm getting at, everyone, and Dave will jump in here, but the government backs roughly 92 to 95% of student loans. So for a lender, there is no risk.
None.
Right?
Yeah.
There's no risk. For the school, they're like, well, there's a blank check, right? There's no incentive to be efficient. Like, we're in the life insurance industry. Life insurance companies, especially the mutual types that are owned by policyholders, they are very lean, efficient companies, right? They don't have free coffee in the office. That's an Elon Musk reference to Tesla, but maybe they do. But so they're very lean, very efficient. There's no. You look at any government organization, none of them are lean, none of them are efficient. Not one. I was in the DMV this morning, and let me tell you something. It's like any DMV you've ever been in. So,
yep.
There's no incentive. There's no competition. It's a monopoly on lending.
And you're talking to two guys who have extensive experience working for the government in the U.S. military, right? So we've seen it from that side. at least. So, yeah, and let's get back to the word forgiveness. So, words have meaning. That's something I like to repeat over and over. Like, words have meaning. When we talk about life insurance, we have to be very precise in the words we use. When we're talking forgiveness, that's just a twisted. That's just lying to you, right? It's a political term.
Feels great.
Yeah, it feels good. Like, oh, forgiveness. The Bible tells us we should forgive. Okay, then what could be wrong with it because you're forgiving? It's not. It's redistribution. It's taking from somebody to give to somebody else. So it's plain and simple. That's all it is.
That's right.
So be careful of the words that you accept and start, like you said, you and I were talking before this. Anytime we hear the word government funded, those two words together, we immediately replace it with taxpayer funded. There's no such thing as government funded. It's all taxpayer funded.
Yeah, I told some guy on Facebook that the other day. I was like, what do you mean government should increase the funding? The government doesn't have any money. They're going to have to either take more from the private sector or they're going to have to cut from other services to redirect resources toward whatever you're talking. He was a state professor or something, at a state school or something.
Or the Fed prints more money for him and we all pay through inflation, the hidden tax, right?
That's right.
Yeah.
That's right.
Okay, so let's get back to the problem. So the problem, the GI Bill, like you mentioned, was introduced after World War II, and that was the government trying to solve a problem that the free market could have solved on its own. The fact that, we have all these men coming back to the economy and there's no jobs for them. We better just send them to school so they don't, so they're not homeless and unemployed. Right. Like as if there's a limit to how many jobs can be created by the ingenuity and creativity of the human person, when they're given free rein to do that. So
that's right.
And then
good intentions, right?
Yeah, much like Social Security, but of course, and then it just blossoms into some monster you can't control anymore.
That's right.
And then the federal government started guaranteeing student loans in the 60s. And you already stated that. And if there's any risk, a bank will make a loan and they know it's guaranteed by the government. So if it doesn't get paid back, the government's going to pay it. Like there's no risk. It's kind of like FDIC insurance. That really irritates me too, that everybody has FDIC insurance, all these banks. So
it's not real insurance.
Not real insurance, but how do you separate the good banks from the bad banks when they all pay the same rate? Like if you're a bad bank and you're taking high risk, you should pay a much higher insurance. Just like if you're a fat smoker who lives on donuts and cigarettes, you should pay more healthcare premium than I pay. Like
no question.
It's just the way it should be. And I think that
actuarial science.
Yeah, it's completely fair that way. But the government disincentivizes that, and they actually incentivize whether their intention was to or not, they incentivize risky loans. And what's more risky than loaning money to a 17-year-old moron with, well, actually, why don't I just read this? So I wrote this, I don't know, this struck me a couple months ago for some reason. So I wrote this little story. If you bear with me, let me tell you a little bit.
Yeah, I think you should read it. I think it's good. And we'll have it in the show notes too.
Okay, cool. So here it is. All right, so two men were standing in line at the bank. The first one walked up to the banker. He says, "I'd like to request a mortgage loan to buy a home for me and my family." The banker says, "Please tell me about yourself." "Well, I'm 40 years old. I graduated from a top-tier university 18 years ago with a bachelor's degree. I earned my master's degree 10 years later. I have an 18-year uninterrupted employment history with references I can share. I've made over $100,000 in income every year for the last 6 years. I have zero debt to include consumer debt, student loans, or mortgage debt. I have 18 years of credit history and my credit score is 800. I have owned and sold 3 primary residences in the last 10 years. 2 years ago, I started my own business and I'm currently self-employed. I've earned a gross revenue of well over $100K in both of the last 2 years running my business, and I have very low overhead expenses. This year, I'm on track to gross even more. I can provide all tax records to confirm this. So may I please get a loan?" What's the banker say, Paul? You play banker.
I'm going to be the banker. I can't use that voice, though. I'll laugh. But all right. "I'm sorry, sir. We can't use your self-employed income to grant you a loan. So unfortunately, the answer is no."
Okay. So this is a dude who's got...
I feel like I know this guy.
Yeah. It's almost like I was writing in the first person. So this is it's a true story. Yeah. So now let's go to the second person in line. You play the banker again. So the second guy walks up to the same banker and says, "Hey, Mr. Banker, I'd like to request a student loan for college."
Please tell me about yourself.
Well, I'm 18 years old. I just graduated from high school with extremely average grades. I've never had a job and am currently unemployed. I'm not sure what I want to major in or what I want to do when I graduate from college. In fact, I'm not even sure I will finish college, but it sounds fun and everyone else is doing it, so I'm going to give it a try. I have no credit history and don't even have a credit score. I'm not even sure what a credit score is, to be honest. So may I please get a loan?
Approved. How's 100 grand sound?
Where do I sign? Like, does anybody see anything wrong with this? This is what happens when the government intervenes in private affairs. Plain
That's
and
right. We
simple.
saw it. We saw it with some private mortgages. The government was, pressuring, and you had Bush, Bush saying it, President Obama saying it, where they were, and through like community organizing groups pressuring banks to make subprime loans, and not everyone needs to be a homeowner. Guess what? Not everyone needs to go to college, and that's
Right.
what happens when you nailed it. When the government interferes in private affairs, this is what occurs. Yet we keep asking for more and more of it, and we wonder what is this? What is the problem?
Well, and then what does the government do when
They create more policy, which to fix the last problem that they caused,
Yeah.
which creates even more problems.
So this is the solution, debt forgiveness, to fix the problem they created, federally guaranteed student loans to unqualified borrowers.
Yes.
Like, there you go. So are we seeing a trend in the way the government operates here? Like, do you want all of your money, like this is kind of off topic, but do you want your money in a government sponsored plan after knowing how the government operates and the idiots in charge making the decisions they make? Like, I don't know about you. I don't want a single dime of my money in a government qualified plan.
No. There's a very simple solution. We talk about the problem a lot on this podcast, Dave, and
Yeah.
the solution's quite simple. Number one, undercapitalization. We're paying 34.5 cents in interest over our lifetime to other people's banks. We're investing maybe 5 or 10% of that in a qualified plan. Very little liquid savings, and then we wonder why we run into these problems where, hey, I leave college with $100,000 of debt or more, and I have nothing to show for it, but this job that I have, and I can't. I don't
Yeah.
believe that people can't make their loan payments unless they're. I mean, I don't know.
Well,
The average loan debt's 28,000. That's like a Honda Accord. A lot of people have Honda Accords around here.
yeah, that is the average loan debt.
Yeah.
So, I mean, there's some with
Who
plenty more
isn't
than that.
paying them? I guess. You know what I mean? Like who isn't repaying their loans? I don't know. Do you know anybody? I'm just.
I don't know.
Just
I
curious.
mean, I know some pilots. There's pilots who go off to get an aeronautical degree and
Yeah.
become a pilot, and then they go work for an airline, and they've got $100,000 in debt right there.
Sure.
And
Yeah, and they're not
barely-
making a lot right out of the
and
gate
they're not-
either.
You're not making much, especially at a regional. Before you get to the majors, even there, you may start at 90,000 or something, which is okay, but it's not enough to repay your debt very fast.
Sure.
So, yeah. So let's talk more about the solution. I think Nelson, we'll just go back to what Nelson says. It's all about the way you think. And like you mentioned, what do you got there?
I wanted to read what he says about on page 75.
Okay, this is funny. So Nelson has a great sense of humor. And if you knew him, or if you've at least watched like his videos and the speeches he gives,
Yeah, I own his series. So
yeah, then you'll be able to see how he was, like the look on his face probably when he was writing these sentences. So
I
go
like
ahead.
his joke about the weed. Do you own a weed eater? And then from there, the joke.
Oh
hilarious.
yeah, yeah. For another time maybe.
Yeah. All right. So this is on page 75, Becoming Your Own Banker. First of all, I had the distinct feeling that the college degree, and it's italicized, is extremely overrated in its value. Witness the number of people you know who have a degree and thus feel they are educated, but other than the degree, there is very little evidence of the fact.
Yeah, that's
And that he wrote this 22 years ago, right? 2000.
so that's
Means he probably
Nelson's-
really wrote it in 99.
Yeah, and that's his nice way of saying, just because you got a piece of paper, doesn't mean you're not an idiot.
Right. All you have to
So
do is watch like Ben Shapiro go to a college to to deliver a speech, and then some of the questions he fields and answers, and realize these young people don't have the ability to think. They're all emotion, no rationality at all.
yeah, yeah.
Unfortunately, but anyway,
Well, and having a piece of paper doesn't mean you're smart, right? Having a diploma doesn't mean you're smart. Just like having a BMW doesn't mean you're rich. Like how many
it
people?
does make you a jerk, though.
Somebody's not a Beamer fan.
Well, we don't have any anymore, so I can say that.
Yeah. Yeah. So it's really all about the way you think. And then, we're not against higher education. In fact, I like what Nelson says here on page 77. He said, I'm not against higher education. To the contrary, I believe it should be a lifelong activity. So what is he really saying there? That education, like learning, have a passion for learning and understanding.
Yes, and he was obviously a lifelong learner. He said in this book, right, we never arrive in knowledge. That's not a thing. Part of his discussion about the arrival syndrome, where people,
Right.
Hey, I've made it. Well, there's always something else to learn. There's always another deal to do. There's another human being to help, right? The work is never done, especially with education.
Yeah. And, I'm certainly not against college completely. I'm against the mentality that everybody needs and deserves to go to college. It's not true. Like,
Right.
what Caddyshack, the world needs ditch diggers too. Like,
That's
and
right.
just because you don't go to college, doesn't mean you're going to be a ditch digger. Like, how many successful entrepreneurs are out there who never went to college or dropped out of college and absolutely hated school because it didn't arouse any kind of passion for learning, and they want to go out and they want to go learn on their own, and they do it, and they do phenomenal. Like, you can accomplish a lot without college. So I think that kind of goes into another mindset that people who think that also think that if I go to college, I will be successful. And I think a lot of people are seeing that's not the case.
Right. They throw out that statistic that a college graduate earns on average $1 million more than his non-college graduate counterpart. And I
Yeah.
think and that may be true, or at one time it was true, or maybe it is still true. But again, that doesn't mean that it is necessary for everyone to attend. Of course, this discussion is not what we're telling people to go to college, not, but just something to
Yeah.
think about. The economics of it are making less and less sense, absent a few, very specialized things. Like Tammy's a nurse, but I was a history major. My path to the Army was, I'm a history buff, so I got to major in whatever the hell I wanted, and I did.
Yeah.
But it's a worthless degree, quite honestly.
When you and I both wanted to be officers in the military, that was my goal, and the only way to get to that goal was to first get a 4-year degree.
Right. That's right.
So I did that. So let's talk about the solution when it comes to financing college. If you don't want to take those government, get in bed with the mob and take federal money and all the
Taxpayer
handcuffs.
money?
Yeah. Oh God. Thanks. You caught me. Nice. Well done.
Well, it
Touche,
is, right?
Yeah.
It's a
No,
taxpayer-backed loan.
it is. It's taxpayer guaranteed, not federally
That's right.
guaranteed. Yeah. So what do we do? So we had episode 15. If you really want to dive into IBC versus the 529 college savings plan, which is what most people do, listen to episode 15. We do a whole episode comparing the two and giving our thoughts on the 529. But what you and I have both done is open a IBC policies for our kids. And that's their college fund. It's their, maybe when they turn 16, take a loan against it, go buy a car, and then pay themselves back instead of, having to pay a bank back. And then they go to college. Great. They've got money right there to help them out or start a business or buy a duplex or whatever they want to do.
I told Anthony once we moved to Tennessee that I'm gonna, if he wants to, all the lots that we bought by the lake are around 3/4 of an acre or more. I was like, you can buy yourself a 0-turn mower, and go start a lawn business in the neighborhood. There'll be a couple hundred households, and $50 a pop.
Oh yeah, you
75 bucks
can
a
whip
pop.
those out 10 minutes each. That'd be great.
He'll be crushing it.
And then what he needs to do is teach his little sister how to ride the lawnmower and pay her $30 each. right?
That's
And he
right.
gets to pocket the other 20 and just
That's
sit at
right.
home in the air conditioning playing on his iPhone.
There you go. Well, we're not going to get them phones,
Yeah.
but anyway,
So
yeah. So exactly, that's how I'm funding my children's college is through dividend-paying whole life insurance contracts.
yeah, and even there, I'm not going to stop there because, I'm about to get remarried, going to have 7 kids. I'm not paying for anybody's college. Like these policies were designed for them. I'm going to give them those policies at some point. But
Yep.
like if somebody wants me to pay for college, they're out of luck. So go figure it out. But I will help you along the way. Like how about like most public schools nowadays? Actually, I don't know about most. I'm just talking from my local area. You can get
Yeah.
college credits your senior year in high school here,
Yep.
and you
Do it.
can leave. You can leave for almost you leave high school with almost 1 year of college credits. Then go to a community college, get
Yep.
another year of college credits, and then go to a 2 year university. Maybe join the Air National Guard, the reserves, do something like that, and have
Yeah.
somebody else pay for it. There's plenty. Amazon, I
There's
think, will
plenty of
pay for your
ways.
college, right?
There are many ways to not leave with severe debt, but a lot of these parents and kids, God love them, they want their kid to get this college experience, whatever that is. I went to a military college, so but I don't feel like I missed out. I don't even know what the college experience means.
Yeah, I mean,
I don't understand what you know what I mean. I don't know,
yeah,
but I don't feel like I missed out on anything. And I was talking about this with one of my good friends who was my college roommate my sophomore year, and we both felt we didn't miss out on anything, and because we didn't. I've
except
been to other
probably
colleges and
a lot more bad mistakes.
yeah,
You know,
right.
idiot mistakes because as a male, at least for men, our brains aren't fully formed until we're like 25.
That's right.
So
Some
if you,
some are never fully formed.
some are never. Certainly, our sense of humor is never, and maturity is never fully formed because that stopped at like age 13, I think.
Yeah, but yeah, about that plus or minus. Yeah,
Yeah,
but
but
but yeah, there's ways, and I encourage everyone to explore. There's money out there. There's just like Dave mentioned. There's just smart ways to go do it online. I mean,
yeah, right. I don't think anybody asks I mean, college is a get your foot in the door at a job, like at a big company if you want to work for somebody, right?
yeah.
They're
Certain
not
colleges, of course, are stepping stones to
sure.
you know.
But they're not going to say, "Hey, did you get your degree online or did you go in person? How often did you sleep through class? Did you actually learn anything?" Like, all they care is, did you finish the degree? Do you have a 4 year degree or not?
Right.
Like, nobody, I might have been asked my GPA a couple times, but yeah. So there's other options, and for us, the solution goes back to infinite banking and setting that concept early on in your kids' lives. Like if you have, if you're funding a 529 right now, listen to episode 15 and see if maybe funding this might be a better alternative because who knows if the kid's going to want to go to college.
Right. Well, it's not maybe. Dave's being nice.
What's not baby?
It is a better idea
Oh,
instead of the 529.
okay. All right. So
I agree with you.
It's absolutely a better idea.
Right.
I've got no love for 529s whatsoever.
No.
Complicated, risky, yeah, everything I don't want in my
Riddled
finances.
riddled with fees.
Yes. Yeah. So, well, we will put some links to. I dug a couple sources, some Forbes articles for some of these stats, so I'll put those there so people don't think we're just making stuff up as we go. Put that there and put that little parable in the show notes as well, in case anybody wants to read that. But yeah, this is a touchy subject for a lot of people, but I think if people can look past the first layer, like everything when it comes to the economy, look past the first layer and the quote unquote intent of what the politician's trying to do and see what the second, third, fourth order effects might be.
Yeah, you said this very early on in another podcast, but you said, question everything. Question what we say, question policy when it comes out, question this latest thing that, yeah, on the surface, oh, it's wonderful for these people, but it's gonna hurt them in the long run. It's gonna hurt everybody in the long run too.
Yeah, yeah.
Not the rich, but everybody
Not,
else.
not the rich. I saw a meme that said, "Hey, Biden forgives $10,000 of student loan per person." In unrelated news, colleges increased tuition by $10,000.
Surprise.
Yeah.
Yep.
So we'll see if that actually becomes reality. But
No, I like it. But it's never a mystery, is it, Dave?
No.
It's not.
If you know the problem, you'll know the solution. So
That's right.
all right, everybody. Well, thanks for listening again, and we'll talk to you all next week. We'll see you, Paul.
See you, buddy. Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.